Welcome to A Foreigner in Finance, where I get to sit down with the real experts. As I always say, English isn't my first language, but it doesn't matter because this podcast isn't about me, it's about my guests. So let's get started today. Today we have Peter Wright from Rock the Score. Welcome, Peter.
Hey, great to be with you. Thanks for having me on your show. It's an honor.
For sure, thanks. So, Peter, what can you tell me about your background?
Well, English is my original language, and it really is because I am from England. So I grew up in London, England, and I've been in the United States now over 30 years. So my accent's all screwed up a little bit. It's got a little bit of English in there still, but it's Americanized a little bit now too. So if someone's trying to figure out where's he from, well, that's the answer. I don't know where I'm from anymore. So.
Great, great. So, you hosted in the past a real estate radio show. You are the
Yeah.
CEO of Rock the Score, and you also are a partner in a mortgage lender firm. Which part do you think you have enjoyed the most over your career?
Yeah, so my background, even when I was living in London, was in real estate, in mortgage lending. So that really has been my foundation. That's really where I started my career. And when I moved to the United States, I just continued that. I just continued working for banks and mortgage bankers and those types of things. And I grew my career, in that space. And that's been very rewarding. I love helping people, especially first time home buyers, purchase their first home. It's a great feeling. It's great to help them do that. And that's really where Rock the Score came out of too. So we saw a huge need in helping especially first-time home buyers or people new to our country, immigrants and those types of things, help them build a credit profile. And Rock the Score is a data reporting company. We report rental data to the credit bureaus. And so we started that company almost 7 years ago. And that has been extremely rewarding too. We love doing that. It's a nationwide company. We report rent in all 50 states and Puerto Rico, and also are looking to go into the Canadian market. So we do that nationwide. And again, very rewarding. Basically, what we do is we look at tenants across the country. We work also with property management companies across the country, and we report those rental payments to the credit bureaus each and every month. And that's going to have a slow burn. That's going to have a slow impact on someone's credit profile. Each month that they make an on-time rental payment, it's going to impact their credit score. It's going to boost their credit score. It's going to build out their credit profile. So that's what we do with Rock the Score. It took us a little bit of a journey to get there. As I say, with the mortgage banking background, we definitely saw a need for that. And that's what we do now too.
And what about the Essex Residential Mortgage?
Yeah, so that's our mortgage company, Essex Residential Mortgage. We started that company um, a long time ago, 2006, I think, somewhere around there. So we've my business partner and my employees have had that company in place for a number of years. We really enjoy, like I said earlier, we really enjoy helping people with the American dream, with home ownership. So that's really important, and also the rent reporting part of that fits right into it too.
And is there any people that you feel it's somehow difficult to work with as as clients?
No, not really. We work with all kinds of clients, whether someone's looking to buy, a move-up house for $1 million, or someone's looking to purchase their first condo, for $150,000. The aspect of just being nimble and flexible and being able to work with people across the spectrum has really been rewarding for us. And sometimes when you have someone new to the country. I mean, I was new to the country at some point. I'm sure you was too. When you come over here, you don't have a credit profile. The United States has its own credit profile. You work with TransUnion, Equifax, and Experian, and if you don't have that credit footprint, sometimes it can be difficult to qualify to buy a car, to buy a home, even get a credit card. If you don't have credit, no one wants to give you credit. So it's a classic chicken and egg situation. And that's what we wanted to try to help. There's a lot of people that we work with in that international space, that immigrant space, where they might be renting when they first come over here, but they're trying to get money from the bank to purchase a car or even get a credit card. It's hard to do that without a credit profile. So reporting your rent to the bureaus can not only help establish that credit profile, but it can also boost that credit score up. That little 3-digit number called a FICO score is vitally important. That's your DNA. That's how banks and financial institutions look at you. They don't look at your character. They don't look at your anything else about you. They look at that little 3-digit number and they make a determination on you. Rightly or wrongly, they're going to look at that FICO score and determine whether you are a good risk for them or a bad risk for them. So the higher we can get that FICO score for people, the better.
You mentioned that you wanted to expand, and whatever you say right now about how's the situation in the US, you mentioned Canada. Is it the same situation in Canada or is it something else?
It's pretty much the same. The credit bureaus are a little bit different there. For example, the credit Equifax are the only company that report rental data in the Canadian market right now. So there's only one bureau up there, where there's multiple bureaus in the United States. So it's a little bit different. We're actually approved to do Canadian rent reporting. We just haven't gone into that market yet.
Okay, great. So, what does a typical day look like for you in terms of personal life and business life?
Uh, the personal stuff is easy. I'm married with 3 boys, and so all that brings, lots of chaos in the house and dealing with that. I have a grandbaby too, which is awesome. I'm a big football fan, not American football, football. So I watch that all the time. I'm from London originally, so my team is Arsenal, so I follow Arsenal, and yeah, it's a lot of fun. A lot of stress too, but it's a lot of fun.
I understand that. It
And
happens.
business wise
Yeah.
is every day is a busy day. Every day is a new day. Every day is a different challenge. But you have to be flexible and nimble enough to meet those challenges and to help. Different people have different situations that require different approaches, and you need to, again, have the expertise and the experience, to change with those different challenges sometimes.
Could you say you enjoy your everyday life?
Oh yeah, yeah, yeah. Every day is a blessing. You don't know what tomorrow will bring, right?
Yeah, that's really important. I wanted to ask you about some trends that you see in the industry right now.
The in the real estate market, and I see this in our local market. We're in St. Louis. We're in Missouri, but I see this really all over the country in various markets. There's really a lack of inventory. There's a lack of homes on the market, And that's really putting a strain on the real estate industry. The it's supply and demand, right? So, there's not enough homes for sale. Builders have stopped building homes like they did back in the 1990s and the early 2000s. So there's just a lack of property for buyers to buy, and that is creating an issue with certainly the local real estate market. But I see this on a nationwide basis too, in multiple areas. When a buy, it's really a seller's market, and buyers are overpaying and overbidding for real estate right now, and it's it's not sustainable. Um, that's happening right now, but there has to come a point in time where the value of that house is only worth so much to someone. As I say, the market right now has really been running this way for the last 20, maybe 12 to 18 months, and it's continuing into 2025. It's simply not sustainable.
And do you see it causing a crisis, or do you think it's just something that's going to get solved itself?
I think it will solve itself. I don't think there's going to be a crisis. I don't think there's going to be a bubble per se like we had in 2008 for a few years. That was a different market. That was like the Wild West of real estate. There was no rules. Lots of rules now, lots of checks and balances. And I don't see that repeating itself, although the current market is concerning. That I see a lot of people, a lot of buyers overbidding and overpaying for homes. For example, if you see a house listed at, you know, 350,000, 375,000, it's selling in the 400s. It's like I said before, it's not sustainable. It has to ease up and end at some point.
You see it affects people's quality of life, like people overpaying for their homes and maybe other stuff caused by inflation. It makes people affording to live, and that's okay, but not living as I guess everyone could with less inflation or less overpaying in the housing market.
Yeah, I mean, what we look at is the, the ability to repay the loan, the ability to repay the mortgage. That has to be there. That's a that's a guideline, and people are not extending themselves based off of the underwriting standards and the underwriting guidelines to get into these homes. They're simply just overpaying for those homes. A part of the problem is I talked about the lack of new construction and the lack of building. Part of the problem also is, you had a couple of years back to back, 2020, 2021, where mortgage interest rates were at historical lows that we'll never see again. You had interest rates that started with a 2 or a 3. And you've got a lot of people sitting on 2% interest rates and 3% interest rates. Even if they want to move, maybe if they want to, their kids have moved out and they want to downsize, they're not going to walk away from that 2% interest rate into a 6% interest rate or a 7% interest rate. They're not going to do that. So until interest rates come back down, and we'll never see 2% and 3% again. I strongly believe that. But it would be nice to get them down into the fives, maybe even the fours. And then those people, it's not quite a bigger decision. It's not a huge decision anymore, to go from a 2% or a 3% to a 7%, whereas you could go from a 2%, 3% to maybe a 4%. People are much more likely to do that. That will free up a lot of inventory, more homes on the market, and I think that will help self-correct what we've got going through right now.
Knowing how difficult the situation is, from what you say, how important is your business to these people?
Business is very important. I mean, we provide a service. We provide a, a great service to people that are looking for the American dream for home ownership. Again, I work with all kinds of different people, but by far uh, the most rewarding, the most enjoyable part is dealing with first-time home buyers. People that haven't owned a home before. They're very grateful, and we're very happy for them that we're putting them into that situation. And that works again also with Rock the Score. Rock the Score is a great program, and it's a great tool for people to use as a stepping stone into home ownership. If you think about it, a rent payment is a glorified mortgage payment. It is a mortgage payment. You just happen to be paying somebody else's mortgage, your landlords. So you're used to paying that rental payment every month. The mortgage payment really isn't going to be that much different. It's going to be roughly the same amount, but now you own that home. You're getting the tax benefits on that mortgage. You have a situation where you are now enjoying the benefits of home ownership. What Rock the Score does is a stepping stone to home ownership. We report that on-time rent payment. It helps build your credit profile. It helps build your credit score, and it 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 makes you ready for home ownership. One additional thing that we can do with that rent reporting platform is we can actually go back in time. So we can report the past 24 months of payments. So we can take a look back, and we can take the rental payments that you as a tenant has made for the last 24 months, and we can include all of those payments on your credit profile. It really has a significant impact on your credit profile and your credit score. And that can really make you ready for home ownership much, much faster. So if anybody out there that has been renting for a number of years, got to use the program, because it really does put you in a great position to ultimately own your own home because of the empowerment that we provide to that credit score.
Yeah, service is definitely great. How has technology impacted, if it has, your business or your growth strategy?
Yeah, technology is a big one. I mean, we'll joke about it all day long. Technology is great until it doesn't work, and then you're hitting your head against the brick wall. But technology has been really good for both industries. Rock the Score is a virtual platform. We have an office. We have bricks and mortar, but we don't have customers come into our office. It's everything that we do with Rock the Score is online. People upload their lease agreements, their um, uh, photo IDs, driver's licenses, that kind of stuff. Everything is done virtually with Rock the Score. So that's a huge part of our business, is using the technology that surrounds that. But also, we have to ensure that the checks and balances on that platform is secure. We're dealing with a lot of very personal information, and that has to be 100% secure and protected, in which it is. We also run cybersecurity checks. We also validate and verify everything that people send to us. For example, the photo IDs that they send to us, they're all checked for accuracy, and if they are real or not. We get say a lot, but we get a fair few people that use counterfeit driver's licenses to try to establish a credit profile with us. We can deal with that in real time. The technology that we have on our website provides all of that. So yeah, technology it's everywhere. It's all we do these days.
Was it difficult to have that kind of technology that helps you, for example, solve a counterfeit problem like you just said?
Not really. I mean, we have an IT staff that does all of that. The credit bureaus also dictate that we do certain things. We have certain protocols. We meet certain checks and balances. So in order to be a data furnisher, which we are with the credit bureaus, we're required to keep up to date with everything that they require from us. So it kind of rolls downhill. They tell us what we need to do to meet their requirements, and our IT department, create that environment for us.
What are some current challenges you're facing, and what victories are you seeing within your company?
We would really like to work with more property managers across the country. It's hard to get to the property managers promoting our platform. We were one of the pioneers of our industry 7 years ago. There's a lot more rental reporting companies out there right now, but we were one of the first. So getting the word out that the platform even exists was really the first challenge. Um, and once we did that, it's really getting hold of decision makers at the property managers to have them engage in the platform, and for those property managers to help their residents, to help their tenants, because it does two things. Reporting the rent payments helps the tenant. It helps them build a credit profile. It helps them build a credit score, and they can use that for the future. So that's where it helps the tenant. What it also does is it helps the property manager. The property manager can now offer a value-added free tool for them to the tenant, saying, hey, we have a program for you where you can report your rent payment to the credit bureaus. Doesn't cost the property manager anything. So they can offer that value-added tool to to their residents. The second thing that it does for the property manager is it encourages on-time payment, because now that rental payment is being reported to the credit bureaus, the tenant are much less likely to pay that late. So it just encourages and promotes on-time payment. So that can really help the property manager reduce their late payments and delinquencies.
And what victories are you seeing right now?
Victories?
Yeah,
Yeah.
like
So, we're working with a number of new companies. One in particular is we are helping with first responders and veterans, military. And we have a platform that we've been asked to join. It's called Defenders Gateway. So if any of your um, viewers have military background, if they're veterans, if they are first responders, they can join this app for free. The app is called Defenders Gateway, and the app provides benefits and discounts and promotions for veterans and for first responders. They liked our program for that reason. They wanted us to be on their app, and we are. And so now we can offer rep reporting, to hundreds of thousands, if not millions, of users of that app, across the country. That's a really big win for us. We were very excited to be asked to join that app, and that's huge. The app has been around for a number of years, but they're just rolling out version 3 of that app literally, I think, this week or next week. So, if again you have any uh, viewers, listeners that are in first responders or ex-military or veterans or families of those, they should download that app, because it can have some great benefits for them, help them save money in a number of different areas, including reporting your rent.
you mentioned it was difficult to get to property managers. Once you do it, is it easy to convince them to
Yeah, it
help?
really is. Again, it's all about getting to decision makers, and that's really been the hardest thing. But once we get in front of these property managers, again, offering something to the property manager that A, it doesn't cost them anything, B, it's going to help their residents, and C, they don't have to do any work. We don't want to give someone another job. I mean, no one wants another job, right? I mean, they're usually busy enough doing what they're doing. So if we can provide, the benefit to them, the benefit to their resident, and also let them know that they really don't have to do anything. We do the heavy lifting on this. I think that's the biggest takeaway that we see is property managers are very excited about this, but they're like, well, what do I have to do? What's our involvement? Do I have to hire another person now to do the rent reporting? No, we do the whole thing. So I think that's the biggest takeaway that we've had is, that we provide a great platform and a great program for these people that really benefits everybody. And, we take on the work there.
Which key metrics do you focus on to measure growth?
We look at our enrollments, so the enrollments that we get, and again, it's all done through our website. Our website is rockthescore.com, and so people enroll through our website. We monitor that on a daily, weekly, monthly basis to see the enrollments. We also look at how long people stay on the program. There's no minimum. So when you enroll in the program, you can report the rent and stop it the next month if you want to. We see that sometimes, but most people stay on the platform for a number of months. In excess of 7 months is our average on that. But we've had some people that have been on the program since day one. We started in April of 2018, and we still have some clients that enrolled in the program right when we started, and they're still with us today. We also see people, and I like to call it graduating from the program. What I mean by that is when they close their account with us, it's usually for a good reason. It means they're buying a house, and we love that. We congratulate people on that. It means that the program worked. It means that they used the program to enhance their credit profile, enhance their credit score to the point where they're no longer renting, but now they're owning their own home. And we get people all the time that email us or call us and say, hey, need to cancel the program. Thanks a lot. My credit score increased, and I'm now, we just purchased a home. We don't need the rent reporting anymore. Congratulations. That's exactly what the program's about. We hate to see clients roll off of our platform, off of our program, but if they're doing it in that environment, hey, that's a win for everybody. We love that.
Sounds great. Where do you see, talking about the future, where do you see your company Rock the Score in 6 or 12 months from now?
We're really excited about the direction of what we're doing. We really don't advertise. A lot of our enrollments are organic. They find us online. They search rent reporting. We're one of the top ones that show up there. We really do very little advertising. The program speaks for itself. We try to promote our program, through B2B, business to business. That's the biggest win for us if we can get a property manager to enroll their residents. And you know we want to continue to do that. The addition of us being a part of Defenders Gateway is huge too. So that's going to really open us up to a lot more renters, albeit in the first responders and veteran environment. But you know, uh, we see pretty significant growth and continued growth with our business.
To end our conversation, I wanted to ask you a final question, which is, if you could solve one major challenge for your company today, what would it be?
That's a really good question, and I need to think about that just for a minute. Solve one big question or one big problem?
One big challenge, yeah.
One big challenge. So there are over 115 million renters in the United States. Most of them don't even know that you can report your rent to the credit bureaus and build credit that way. I would love a way to get in front of those numbers, those people, because our program is, yes, it costs money, but the we keep the cost to an absolute minimum for maximum participation. That's really our philosophy. We want to help as many people as we can. So a big challenge would be, yeah, how do we get in front of these people? Because there's a lot of people that don't even know that they can do this, and it can be life changing. Even if they're not going to buy a home, increasing that FICO score, that little 3-digit number, can reduce interest rates on your credit cards. It can reduce premiums on your insurance, like car insurance. They insurance companies look at FICO scores too, and they base their premiums on those. So even if we're looking at people that just don't want to buy a home, that they want to rent long term, and there's nothing wrong with that. How do we get in front of those people and help them? Because there's a way of helping them financially if they just knew about the program. So I guess that's the biggest challenge.
Great, Peter. So I loved your insights. I love what you do, and I also appreciate that your your willingness to help people, which is something that is great in business. People
Yeah.
that are like to help other people. So I love to have you. I've loved, sorry, to have you on this podcast today.
Well, I really enjoyed our time together. I appreciate it. You had some great questions and very thought provoking, some of them. I had to think about some of those, but yeah, again, thanks for having me on your platform. It's been a pleasure, and good luck to you too.
Thank you, Peter. Thanks a lot.